Good afternoon. For over 3 centuries, the insurance industry has provided a financial backstop to evolving industries, ensuring both first and third-party risks associated with ships and its cargo, buildings, and eventually automobiles, airplanes, homes, and businesses. Relying on the law of large numbers and decades of actuarial data to guide our underwriting and pricing. But today, that foundation is being challenged. We are witnessing a collision between 300 years of tradition and a 21st century risk landscape that simply refuses to stay still. We are dealing with the continuous morphing of cyber risk and the breakneck exponential speed of artificial intelligence. At ReSource Pro, we see the reality of this every single day. Our clients, many of you in the audience, are actively selling and underwriting cyber insurance. You are deploying AI in your businesses to streamline operations, improve customer service, and process claims faster. You're doing what businesses do, adapting to the market, embracing innovation, and finding ways to say yes to your insureds. The market demands cyber coverage, and the competitive landscape demands the efficiency of AI. But what if the very tools that we are using to modernize are creating a fundamentally uninsurable environment? What if the risks we are diligently writing policies for are too systemic, too unpredictable, and too brittle to be managed by traditional insurance models? To help us navigate this tension, I'm thrilled to introduce our distinguished guest, Barry Rabkin. Barry is a veteran industry analyst with over 4 decades of insurance experience, having led strategist practices at IDC and Omdia. He is also the author of the insightful book, From Stone Tablets to Satellites, the continual, intimate, but awkward relationship between the insurance industry and technology. In his book, Barry paints a vivid picture of an industry that has always relied on technology, yet often prefers to patch the old rather than fully embrace the new. But when it comes to AI and cyber, Barry takes a stance that challenges industry consensus. While many of us are looking for ways to integrate AI into our core functions, Barry has argued that insurers should reject the use of probabilistic AI applications for critical functions like pricing, reserving, and claims. While the market is expanding cyber coverage, Barry warns that AI technologies are making the risk space increasingly indeterminate, introducing new vectors like deepfakes and creating a brittle environment for commerce. He has more than once suggested that insurers should exclude losses resulting from the deployment of AI technology applications altogether. As an industry, we are caught in the middle. We have a mandate to innovate while protecting our clients, but we also have a fiduciary responsibility to uphold. Today, my goal is to act as an arbiter of these two realities. I want to pressure test Barry's warnings against the practical, everyday needs of our industry. We are going to move past the hype, dig into some real risks, and ask the hard questions about why traditional risk management might need to evolve to manage modern threats. Please join me in welcoming Barry Rabkin. Perfect. Have a seat. You've written that cyber risks, especially those amplified by AI, are making the risk space indeterminate. and potentially uninsurable. But our clients are out there every day successfully selling and underwriting cyber policies because businesses desperately need this protection. If the insurance industry steps back and says this is too systemic to insure, aren't we abandoning our fundamental purpose? How do we balance your warnings of uninsurability with the market's absolute demand for coverage?
I think we have to always remember that the insurance industry has fiduciary responsibilities. Yes, we serve a social good, but we only serve a social good if the risk that we undertake the risk we underwrite can generate profitability. And really, before we go any further, we throw around the word cyber. And when I started this second book that I'm writing very slowly, Insurance, Commerce, and the Cyber Age, I wanted to come up with at least some sort of description of cyber. And to me, cyber is the fusion of applications from 4 technologies: digitization, mobility, Internet of Web, and cloud. Those 4 technologies fused together, to me, means cyber. Cyber's not digital, cyber's not cloud, cyber's not mobility, it's all of that. And when I consider all of those together, we can start with digitization. Having worked in the insurance industry, I'm making some assumptions here, so I'll hypothesize that if I walk back into any one of the insurance companies I work for, their data is not clean, it's not standard, it's not interoperable, they don't have a common definition of terms. It's just a mess. Our British colleagues would say it's a dog's breakfast. And that would apply to the data coming in, being stored, and flowing out. So there's a data issue. There's a very large data issue. That data issue is going to be solved very, very slowly. I can't see it being solved quickly. Now, what's happening is that we are cyber-forming society. Because we are getting more interconnected and interdependent, we are making all of our corporations really resemble more of a Hollywood facade. You walk up to a building and you put your hand out and you can touch the building, but you can't see the processes that make the corporation go. And I don't care if it's our insurance companies or if it's Pepsi-Cola or whoever. If you're going through a digital transformation journey and you are taking the results of that digital transformation journey and you're making them accessible in the web, if you're making them accessible in the cloud, all 4, the digitization, the mobility, the cloud, the internet, you are creating a maze of paths for cyber predators to get into. It's not the world that we're used to, a world in which we think in terms of we'll do this, we'll do that. It's a mechanism thinking, a thought process. It's like the industrial era. We'll do this, we'll do this, we'll do this, and that'll be the final result. That doesn't work in the cyber age. We have to think holistically. We have to think in terms of patterns. And because if we don't, I can assure you that the cyber predators are. We are turning ourselves into a giant game of battleship where only one side has the advantage, and it's not us. Now, if we don't insure cyber, who's going to insure cyber? Well, there is one possibility, and that's the government. There could be private-public partnerships. And I think the first time that the US government came out with a cyber strategy, that was either pillar 2 or pillar 3 of the 4 pillars. If we don't have a public-private partnership, then one potential insurance industry solution is for the client to work with a wholesale broker, to work with an excess and surplus insurer, or an MGA. MGAs think they're venture capitalists anyway, so I don't see much of a change there. And they'll get their capacity from reinsurers. And note, I purposely left out primary insurers, because as we continue to cyberform the world, commerce and our corporations are becoming more porous, P-O-R-O-U-S, or maybe you don't need the U if we're not in England. And it's just, I don't see any way for a property casualty insurance company to accurately or even comfortably estimate the maximum probable loss. And if they cannot do that, if you don't know what your maximum probable loss is, if you write that insurance, you're not acting like an insurance company. You are ignoring your fiduciary responsibilities. You're acting like a venture capitalist. So,
So you started by mentioning the data quality before you got to
what we're doing with
the
our
cyber
corporations.
threats. There's been some that argue that if you fix the semantic layer, that you can then build AI on top of that. Can you just speak to why that strategy may not work?
Well, let's go into a carrier. I've been associated with insurance carriers all my life. If we went into, let me pick an alma mater, John Hancock of mine, and we walked into a specific department and we gave them a term. I don't care what the term is. Oh, let's make it a little harder. Let's say customer. How many definitions of customer do you think we're going to get from that one department? And I would imagine that we're going to get a lot of definitions of customer. And if we brought that up to the company level, we're not going to get agreement on what customer is. Now let's take a term like premium. All right, net premium. Do you think we're going to, if we're not in the actuarial department, are we going to get a consistency of what those terms mean? And I just can't see it. And now, yes, I'm being a pessimist, but you have the data level, you have the context, and there is disagreement, I would hypothesize, on what each one of those terms means. When a technology firm comes out with a new solution, it all sounds good, and then you go back to the office on Monday morning and reality hits. It's like, how are we going to get this done? Should we get it done? And by the way, I don't think there's an AI race. Why is there a race? Every insurance company should be moving at the pace that each insurance company wants to move at. I think there's going to be, you're going to find it difficult to get to that semantic level to achieve it.
Those feel like challenges to me, but not insurmountable challenges.
No, I think 10, 20, 30 years, it'll get solved.
I don't know if we have 20 or 30 years. In the 1990s, the insurance industry responded to new risks that arose out of the introduction of the internet and by developing cyber insurance. And today, insurers in that space are providing loss control and improving the risk landscape through strict underwriting standards. And how do you think about that relative to...
You're assuming that cyber risks are the same as any other risk, and I don't think so. I probably have written too many times that the cyber risk space, I almost feel like Paul Revere, the risk space is changing, the risk space is changing, the risk space is changing. But I don't have the clothes, even though I'm from the Boston area, I don't have the colonial clothes. The cyber risk space is a never-ending, always expanding, nth dimensional, topographical space. It is going off in all directions at all times. And I think the insurance industry has been very lucky that for 30 years, and what's 30 years of the insurance industry? It's a blip in time. But we have been very, very lucky. The cyber risks that will emerge in the future, and that future could be tomorrow, are going to be more complex with higher losses and higher loss ratios. I thought that CrowdStrike would have been a wake-up call. I thought that Marks & Spencer would have been a wake-up call. Marks & Spencer, there's a video, I don't know if it's YouTube or what, but I watched a video of the executives of Marks & Spencer meeting with the parts of the British government. Because of the cyber attack on Marks & Spencer, the British government is going to pony up, maybe they already have, $1.5 billion, pounds sterling. And I don't care if it's a pound sterling or a US dollar, $1.5 billion, That's real money. It's more you can win in Jeopardy. And the British folks were asking the CEO of Marks and Spencer, the CIO, the chief risk officer, basically, and it was all very civil, of course, because they're Brits, asking what happened and what are you going to do about it? And I thought that would wake up the insurance industry. And as I understand it, from what people tell me on LinkedIn and what I read, that the insurance industry is responding. They're selling cyber, and that's another word we throw around. So we're selling cyber insurance. Oh, really? How much? How much coverage are you selling? Well, what terms, conditions, and restrictions? Just, how much can the client actually expect to get from this cyber insurance policy? So, yeah, they're selling cyber insurance, but I don't think they're selling that much of it. And that's a few weeks ago, and we're jumping the gun here, and I apologize. It seemed to me that artificial intelligence, by the way, artificial intelligence, the term AI, it doesn't really mean anything. AI is an umbrella term encompassing a portfolio of technologies, and each technology has its own portfolio of applications. There is no AI. There's an AI application, but at any rate, I didn't see how non-deterministic AI technologies, and those are the ones that hallucinate, that's such a great word, hallucinate, it's so smooth, it rolls off the tongue. It's random errors. You have a technology application that is generating random errors. So put yourself in the mindset of an actuary or another quant and say, all right, so we have this environment of random errors, and we want you to estimate the maximum probable loss of covering this client for generating the maximum probable loss for all of these hallucinations. And I didn't think that was possible. And I don't know if it was a month ago, whenever it was, that Great American, AIG, and Berkshire Hathaway went, thank you, but no. Thank you for the invitation. And now there's 18, 20 plus liability insurance companies who are saying, we're excluding liabilities. We're excluding coverage for liabilities from non-determinate use of AI technology. Some are even going further. They're excluding coverage for AI technologies, whatever the application.
So if AI is becoming the DNA of modern business and we exclude AI from commercial coverages, are we hollowing out insurance such that industry won't be able to rely on the industry, or our industry?
Well, not primary insurers, I don't think. As I said, I think the path might be excess and surplus, MGAs, and wholesale brokers. I think the primary insurance companies' marketplace is going to shrink. And let's not forget that with all these different types of technologies and applications, the old risk is still there. The risk base is just getting augmented. You have the traditional risks, and you have the cyber technology risks, and you have the artificial intelligence technology risks. The other risks are not going away. But yeah, I see the primary insurance industry as shrinking until they could buy an excess and surplus carrier, they could buy an MGA, but I just don't see how primary insurers are going to grow their market. I think their market is going to shrink. And that still takes us back to, well, what does the client do? And as I have bluntly said, sorry folks, I've bluntly said, I don't care. My loyalty is 100% to the profitability of primary insurance companies. So the world is changing, and I'm not going to say, well, hell, we've had a great run, because the primary insurers are not going away. It's just that I think their market share is going to decrease.
Okay. And I'm going to come back to this in a little bit, but you described the fusion of cyber and AI as creating a brittle and porous environment for commerce. I understand the threat side of that equation. However, many of our clients are using AI defensively to predict breaches, monitor networks, and respond to threats faster than a human ever could. Don't we need to fight fire with fire? Isn't AI just as much a solution to this brittle environment as a cause?
That's a great marketing speech. It's really great. and I'm from marketing.
I'll take that as a compliment.
Okay. It's, again, we're using non-deterministic technologies, so we're fighting probabilistic outcome technologies. We're probabilistic outcome technologies. It's not a mesh. How can you prove that you have really defeated the attacks coming in because the cyber predators are using artificial intelligence, non-deterministic artificial intelligence technologies? How can you prove that? You know, I love the firms that say on cyber, we have stopped 80% of the attacks. Well, let's see. The cyber risk space is a never-ending, always expanding, nth-dimensional, topographical space. It's never going to be stable. It's never going to be mature. But you stopped 80% of the attacks. God, I wish I was a lawyer. I just don't see how you can prove it. I mean, again, it sounds wonderful, but I don't believe it. Maybe because I'm an analyst, have been since '97. Maybe because I don't think the glass is half full. I think the glass is sort of dirty and you can't drink the water. So I'm just having trouble agreeing that you're really fighting fire with fire. I understand that you want to, and maybe you can prove in some way with logs and other architectural guardrails that you've done that, but I just don't. I'm sorry. I'm pessimistic. I'm not like the Pogo character with a little cloud hanging over. I'm not that. But
I think we picked up on your skepticism.
Oh, good.
In your writings, you're adamantly against insurers using probabilistic AI for core functions like pricing, reserving, and claim settlement, citing fiduciary responsibility. But the sheer volume of data we process today is staggering. Traditional deterministic models are struggling to keep up. If we don't use AI to process and analyze this data, don't we risk falling behind tech-first competitors and failing our customers who expect instant, accurate service?
Didn't I just hear in change management, fail faster, but learn? Something like that. Again, it's not a race. And there are two safeguards out there. I think they're safeguards, so take this from someone who's skeptical. The plaintiff's bar and insurance regulators, I see as the two safeguards preventing, hopefully, insurance companies from getting ahead of themselves and from, getting in front of your skis? I forget I don't ski.
Out in front of your skis.
Thank you, thank you. I always want to take out the plaster of Paris concession at the bottom of the hill, but I don't ski myself. I just think that I'm not trying to force us back into the caves. I assure you, I've spent my entire insurance career, almost all of it, looking at investigating and discussing how technology can be used to improve customer satisfaction and to get and keep customers. I mean, that really is my orientation. When I started this back in January of 2023, the second book, Brittle, Insurance Commerce in the Cyber Age, I just gathered leaves and I jumped into them and I popped up and I went, this stuff's uninsurable. It just is not insurable because we're making it more porous, we're making it more brittle. And I don't know what the solution. I wish I knew what the solution was so we could buy a home on Maui, but I don't know what that solution is. How are we getting behind? We're getting behind people who are being sued more. There's a tsunami of lawsuits that are just flooding society because people are using artificial intelligence technologies. Oh, it'll give me the answer, and I can go on to the next thing. If you don't verify, and I've heard that word here, if you don't verify what those results are, and of course I hear the human in the loop. What human? Where in the loop? With what experience? With what skills? And as we mentioned before we came in, technology has always moved very quickly. And artificial intelligence technologies moves in real time. We, as humans, we don't move in real time. So where are you putting that human being or human beings to double check the veracity of the results and to innovate safely? You know, I've never known, and someone's going to have to tell me, what does innovate mean? I mean, I've heard it for decades. We have to disrupt, we have to transform, we have to change, we have to innovate. I really would like to know what those words mean. Can the insurance industry improve? I don't know what improve means either.
You asked what people, where in the loop.
Yeah.
You asked those rhetorically, but those are all answerable questions.
Yeah, they are.
So,
But I'm wondering who's going to do it. I mean, seriously, let's go to another alma mater. I was with Aetna Life and Casualty back when they could afford the ampersand. I mean, we sold everything. I tell you, folks, when they sold Amri, it was the end. It really was. I don't know what I was doing that day, but when I heard that Aetna had sold American Reinsurance, it's like, that's it, the crown jewel's gone. Next story. Now they're in health. But let's say we can go back in time, and I was in the group, employee benefits, I was in life and property casualty. You pick any one you want. And they're very much, in a way, they're like a small business. We have to keep doing what we're doing. We have to keep the bicycle moving. We don't have time to figure out which humans we're going to. I was just thinking of something. I was at a Vertifor conference, and there were tables like here, tables of rounds table, 8, 10 people, and there was a table full of agencies, and there was a Vertifor person, and the Vertifor person was asking, so what have you done to become an agency of the future? Which I always get a kick out of. I mean, yes, you have to improve all operations everywhere, whatever improve means, but agencies and brokers are only one part of the value chain. So let's say you improve the heck out of what you do, and then you hit the insurance company, and they haven't improved anything, so there you are twiddling your thumbs. But at any rate, this one woman from an agency was saying she had decided to improve the processes of her agency, and then they asked her to move to another part of her agency, and she did, and she was there for 3 months, and then she went back to her old department. And she found out that her old department had reverted to the original processes before she improved them, because that's what they knew.
we've seen that movie before.
Yes, we have. And don't you think well, you guys know, it's true at the carrier level too. They have ways of underwriting. They have ways of claim adjudication. They have ways of what you fill in the blanks, and they're very comfortable with those ways. So it's very hard to get them to change. But you want to appoint someone, get them to appoint someone to be the human in the loop. Or you want to get someone to somehow move forward on a data semantic level. I've got a LinkedIn contact who is a virtual CISO at NYU Stern, and we talk about artificial intelligence technologies from time to time, and it's his point of view that it's really all a semantic generator. It's just generating the next word, the next phrase. It's not really artificial intelligence. And yes, I've been around long enough to hear the gags, so let's get some real intelligence out there, that'll help. And then you get technology firms and others involved in artificial intelligence, and they'll say, well, we're going to get to AGI, artificial general intelligence. That's a software, that's artificial intelligence technology software that can really think and act and behave just like a human being can, really, or come very, very close. And it's like, if we have enough of the Gen AI operations, or if we have enough of the agentic AI, the agentic agents, AI agents, then we're going to have AGI. No, I don't think so. And it reminds me of years ago. Everything with me is years ago. Years ago, comma, ... There was someone who mentioned they were with Intel, of all places. And this executive's point was, we were never, no matter how much we improved the vacuum tube, we were never going to get to the integrated circuit. It wasn't going to happen. It was going to take a jump. And I think the same thing is true for artificial intelligence technologies. You can use all the Gen AI you want. You can use all the agentic AI agents you want. You're not going to get to AGI. And on there's a few comments I want to make on the AI agents. If you come up with an AI agent that sort of helps or does help with commerce, The insurance regulators are going to be very interested in that.
My next question.
Hey, we take this on the road. Oh, we are on the road.
Regulation, regulators are beginning to address AI. The NAIC has developed model laws. Some states have started to adopt those, including requirements to detect, correct bias, drift, and errors in predictive models. Do you support this direction? And do you see a world where people can effectively govern AI in insurance?
That's a good question. And it's really very timely because, where are we? In April? In February, the National Association of Insurance Commissioners came out with a AI tool, which they've asked 12 states to participate in throughout this year, actually throughout 12 months. And I don't remember all 12 states. I just know the state I'm living in now, New Mexico, is not part of the 12 states. Connecticut is, and I think Florida is, and I don't remember the other 10. But they are going to, each of the 12 states, Insurance Commissioner's Office is going to use this tool to work with insurance companies, life and health, property casualty, health, and they're going to report after 6 months. They're getting the buy-in of the insurance companies. This is what we're going to do. This is what the tool is. And they're going to report back after 6 months, not just to the NAIC, but also to the public. And then they're going to go for another 6 months. So I really don't want to answer that question until I hear the results of that. I do have some questions to someone I know at the NAIC, and they haven't gotten back to me yet, because I'd like to know. They call it an AI tool, and of course my first question is AI what? Are you looking at Gen AI? Are you looking at agentic AI? What are you doing? There was someone I'm connected with on LinkedIn who works with agencies, and he decided to build his own AI agent, and he went out and got coverage for his own business. And I'm thinking, well, it's sort of like a Lego kit, except that it's not a Lego kit, and insurance is not a DIY transaction. And did he get approval from his state insurance commissioner office that he could do this? And he hasn't responded. I have a hunch I know the answer. He's just smart enough to build a tool. And
so going back to the industry's infrastructure, you've written about the industry's preference to patch and maintain old technology. What is your view of the insurance technology landscape today, given the advancement of AI, and which fundamental purposes of insurance organizations do you see AI supporting today, and how might that change in the future?
it's another good question. I haven't heard the questions, folks. I'm going to go back to my old standard reply, and then I'll try to also answer your question. I think that change for each of the thousands of insurance companies rests on the shoulders of the management team of each of the insurance companies. It's not up to technology firms, analysts, consultants, journalists to tell the insurance companies when they have to change, how they have to change, and that pace that they have to have when they do the change. And not to get anything thrown at me, I also don't think it's up to the MGAs, the agencies, or the brokers to tell the insurance companies, each insurance company, when they have to change. Now, back to your question, when I was at IBM Global Services, I know Mark Brady, we played a little game in the insurance consulting area. And the little game was, if you look at life and annuity companies and you look at property casualty companies, which are the most important processes? Realizing that any company, regardless of industry, only has two processes: getting customers and keeping customers. That's it. That's why every organization is in business for those two processes. However, companies have other processes, and those processes are in support of one or both of getting customers and keeping customers. Ted Levitt said that, by the way. He was a professor of marketing at Harvard Business School, and I was, as I said, I was in marketing in the insurance industry, and I really liked Ted Levitt. It just made sense to me. That's why you're in business, to get and keep customers. So we played that little game of which processes are most important. And on the life side, we thought the distribution was the most important. And on the property casualty side, whether you're talking personal lines or commercial lines, we thought the claims adjudication was the most important. And of course, you have those colleagues and others who say, they're all important, they're all important. Yeah, they're all important, but you gotta prioritize. So, where's the money that's going out? On the life side, it's easy. I started my insurance career 1966 as a summer actuarial student. And you learn very quickly that the mortality tables really help you out. I mean, life insurers can tell you how many 55-year-olds are going to die this year, where they're going to die, and what they're going to die of. Property casualty, it's not quite that straightforward. So on the claim side, that's where the money's going out, on the property casualty, on the claim side. And I think that's whatever technology we're talking about, whether it's digitization, mobility, cloud, internet, artificial intelligence technologies, I think that's where it has to be focused. You want to save the money. And then you get into the specifics of, well, how do you do that? And one of the things I liked about being a management consultant when I ran workshops, I always told the attendees, I said, this is great. This is what we're going to do, and you folks are going to work. That's why we called it a workshop. I'll leave it to the details to people who actually can, all right, so these are the various claim functions, there are the processes, here are the activities of those processes, and this is, and before I go any further, I still remember when I started business process redesign with Arthur D. Little, they always reminded me there's one question you have to ask at first. Do we need the process to begin with before we even modify it, re-engineer it, transform it, whatever you want to call it? Do we even need it? And then once you've asked and answered that question, then you can look at the various processes, activities, and steps and sub-steps and think about how you want to improve it, either by getting rid of some of the sub-steps, adding technology, whatever. So I would think that's where you might want to consider putting the various AI technologies until quantum comes along, and then next year we'll be hearing about quantum and how quantum is the fire or the lifeblood or the electricity of society in the insurance industry. And then whatever comes after quantum, that'll be the lifeblood of society.
Maybe that'll be next year's interview. So you would... I'm
going to send a hologram, if that's the case. I'm just going to send a hologram.
You would focus on claims because that's where the money is.
Yeah.
Are there parts of an insurance organization you would focus on because you think it's well suited for today's advanced technology?
Are you asking me which insurance companies do I think would be?
No, within it, whether it's a carrier, a broker, an MGA, are there functions that you believe AI can support today safely?
Well, ingestion would be nice, I guess, but it depends on. This is where the AI technologies come into play. You say, well, if it's a simple claim, we can really have an AI technology do most of it with a human in the loop. But I'll ask you, with deep fakes, auto insurance fraud is pretty high. It's almost as high as health insurance fraud. You have artificial intelligence technologies that can simulate you. They can even simulate me. They can simulate all the aspects of a fraudulent claim. So you say, well, all right, why can't we use AI technologies for simple claims? My thought is that, well, maybe there aren't as many simple claims as you think, because just as we in the insurance industry can use artificial intelligence technologies to adjudicate the claims and pay out the money, the fraudsters, the criminals can use AI technologies to create relatively elaborate claims that look to us like a simple claim. You have a claim adjuster that goes out to take pictures of what the loss was. Well, how do you know that that's what the loss was? Unless you can prove that that claim adjuster was really your claim adjuster, again, it could be anyone. It could be no one. It could be just be a software rendition.
Fictitious claims adjusters is a
Yes.
new one. I haven't seen that one yet, but I suppose it could happen. I know you've been critical of the VC-driven disruption or disruptive narrative in Insurtech. You've called it a fairy tale and said that technology doesn't transform insurance firms into technology firms. But we're seeing massive M&A activity and billions being committed to AI investments. These are billion-dollar bets, more than just hype. What are you seeing that you believe they're missing?
Insurance companies remain insurance companies, remain insurance companies. Go to any state insurance commissioner and ask them if they really care what technology the insurance company is using. I mean, maybe there's someone somewhere that's going to say, are you using AI technologies? We're going to give you a new set of regulations to comply with. It doesn't happen that way. It's the insurance regulations are the insurance regulations. I mean, I heard this back in the dot-com days. If folks who remember the dot-com days, there were companies that were saying, we're going to make the insurance industry history. We're going to transform the industry. We're going to disrupt the industry, whatever the hell that means. And I don't know, the league tables, that is to say the ranking tables of insurance companies by major line of business has really hardly budged in decades. So, yeah, they can have billion-dollar bets. Maybe they can have trillion-dollar bets, but that does not, from a legal regulatory standpoint, transform an insurance company into a tech company. Now, you want an insurance company to think like a tech company? Okay, so what does that mean? Does that mean that they're going to be moving faster? That they're going to be using a newer version of technology or a new type of technology month after month, year after year? They still have to operate. They still have to bill the premiums. They have to take in the premiums. They have to pay the claims. And they can't say, well, wait, we'll tell our claimants. No, wait, we're trying out a new technology. Again, it doesn't work that way. It is a fairy tale for any VC to think that they're going to transform an insurance company into a technology company.
So you wrote a book about the awkward relationship between the insurance industry and technology.
Right.
Yet you sound almost like a Luddite. You almost sound like you don't believe in technology. And you asked a rhetorical question about, like, what is innovation? Well, I haven't met too many people recently, but earlier in my career, I used to meet a lot of people who would say, I started in rating. Isn't it technology that is the reason we don't have big departments of people working in rating? Isn't that innovation?
I mean, the reason why the rating wheels don't exist anymore?
Yeah, and you know, we've...
All right, so yes, technology is going to make insurance operations more effective and more efficient. It's going to make it quicker. Now, is that innovation? If you want to call it innovation, God bless. If you want to say...
Call it?
I call it making it faster and making it more efficient. More efficient and more effective. I don't call it disruption. I don't call it innovation. You're just making things faster, and that's fine. There's nothing wrong with that. And it's interesting you call me a Luddite, but I really do love technology. I mean, I've always loved technology. My times at IBM and AT&T Bell Labs, I mean, I love technology, but I don't want us to get ahead of ourselves. There's a reason why our industry is thousands and thousands of years old. There's a reason why we are a world-class industry providing value to all of society. We just have to do it profitably. I wish I was a venture capitalist. I really do. I wish I was working for a software firm. It's going to be a lot of fun working for a software firm. But we're stodgy. I'm sorry, we are. But we're solid. And we have a promise to pay claims that meet the terms, conditions, and restrictions of the contract. Because to me, that's what insurance is. It's a legal contract with a financial wrap. And we've got to continue with that promise and not back away from it and not do anything to harm our delivery on that promise.
I'm going to go back to something we touched on a little bit earlier. You've raised concerns about AI introducing hallucinations and outliers, requiring massive spend on governance programs. That's a valid concern, but isn't the answer better governance rather than complete rejection? We don't abandon automobiles because they require safety regulations. We build better cars. Aren't we at risk of paralysis if we refuse the most powerful analytical tools available?
Who's defining powerful? But I'm not saying we shouldn't use technology, but we should use it very slowly and very carefully in our industry because we are so strictly regulated. And we've, again, the fiduciary promise that we have, we can't walk away from that. Yes, we need governments, but you're going to have to prove to me that data governance is really very good data governance, that is doing its job. Go back to the human in the loop or the human in the architecture that is saying, yeah, that data is good enough, the governance is good enough, but hallucinations, I don't see you getting rid of hallucinations. That's the nature of non-deterministic technologies, whether they're AI technologies or not, is that they generate random errors.
So we either have a hallucination on the screen or I am 2 minutes over. So I'm going to wrap up with one more question, Barry. If you were sitting in the boardroom of a major insurance organization today, knowing what their competitors are, that their competitors are investing billions in AI, what is the one immediate practical step you would tell them to take tomorrow to prosper in this 21st century risk landscape?
I would be skeptical of the success of the competitors using artificial intelligence technologies, non-deterministic artificial intelligence technologies. I would tell them to continue with deterministic AI technologies and to very slowly pilot non-deterministic AI technologies in very low priority processes, whatever those are, because every process, low priority or not, has got to support getting and or keeping customers. And you're not hallucinating, we're over.
Yeah, we're over. Just a personal comment. I reached out to Barry after following him and his writings on LinkedIn and reading his book. And as somebody who grew up wanting to be in the insurance industry, we are really lucky that we have people like Barry who've spent nearly 50 years dedicated to our industry and is willing to share his perspective gained over that time, even though he knows that perspective may not be widely shared with everyone. And so we thought it was really important to give a voice as we all sort of navigate our own journeys. And Barry, really appreciate you being here with us today and sharing your perspectives.
Thank you very much for inviting me.
Well done.
I really appreciate it.